I want you to picture this moment. A US president sits in the White House and talks about $100 billion flowing into Venezuela's oil fields. Lower energy prices, vast reserves, prime real estate. On paper, it sounds inevitable. And yet, across the table, the people who actually write the checks don't move. Exxon's chief executive uses a single word to describe Venezuela today: uninvestable. Not risky, not difficult. Uninvestable. This is the paradox at the heart of modern power. A country can have oil beneath its soil and still repel capital above it. A government can seize leaders, seize tankers, seize revenues, and still fail to seize trust. If you want to understand why markets don't obey politics, why force cannot replace institutions, and why capital has a longer memory than any presidency, stay with me. Because what's happening in Venezuela is not just about oil. It's about how the world actually works. And to see that, we need to step back. Let's be clear about what is really being proposed. This is not simply an investment plan. It is a political vision that assumes capital will follow control. The United States signals it will decide who operates in Venezuela. Sanctions may be selectively rolled back. Oil revenues will flow, but into US-controlled accounts. Companies are told explicitly not to deal with Venezuela, but with Washington. From a political standpoint, this sounds decisive. From an economic standpoint, it changes almost nothing. Oil companies do not fear geology. They fear uncertainty. They remember assets seized not once, but twice. They calculate production timelines in decades, not election cycles. They ask basic questions. Who owns the oil? Who controls the cash? What happens when politics shift again? That is why the room stayed quiet. Not because Venezuela lacks oil, but because it lacks credibility. And this is the core issue we must confront: how a nation rich in resources became poor in trust. To understand that, we need to look backward, not forward. To understand Venezuela's predicament, you have to go back, far back. Oil was discovered there more than a century ago, and for decades, it was a blessing. Venezuela became one of the world's great energy producers, deeply integrated with international oil companies. But over time, oil stopped being just an industry. It became an ideology. The state tightened its grip. Foreign firms were sidelined, then expelled. Assets were seized, contracts rewritten, trust eroded. This was not a single decision, but a cycle. High prices encouraged control. Control discouraged investment. Disinvestment hollowed out production, and collapse invited sanctions. By the time US sanctions intensified, the damage was already deep. Mismanagement and underinvestment had done what geology never could: choke output. Today, Venezuela produces roughly 1 million barrels a day. Less than 1% of global supply, a fraction of what its reserves should support. So when politicians talk about unleashing Venezuelan oil, they ignore a simple truth. Oil does not flow because leaders command it. It flows when systems work. And that brings us to the first shock. The first shock came not from markets, but from force. On January 3rd, US forces seized Venezuela's leader in a raid on the capital. It was dramatic, decisive, designed to signal a clean break with the past. Almost immediately, the language shifted. Sanctions would be selectively rolled back. Oil tankers were seized, not to stop sales, but to control them. Revenues would be collected and held in US Treasury accounts. From a political lens, this looked like leverage. From a commercial lens, it looked like something else entirely. Because oil companies don't just ask who is in charge today. They ask who will be in charge tomorrow. Exxon CEO didn't speak in ideological terms. He spoke in memory. Assets seized twice. A third entry requiring significant changes. This was the moment when ambition met reality. The crisis wasn't that Venezuela lacked oil. It was that power was being substituted for predictability. And in markets, predictability is everything. This first rupture set the tone for what followed and why optimism quickly turned cautious. Because beneath the headlines, A deeper mechanism was already at work. What's happening here is not unique to Venezuela. It is a familiar and deeply misunderstood mechanism. Capital does not respond to promises. It responds to rules. Oil executives look past speeches and ask three quiet questions. Is there physical security? Is there legal certainty? Is there a competitive fiscal framework? Right now, Venezuela fails all three. When revenues are routed through foreign-controlled accounts, ownership becomes blurred. When sanctions can be lifted selectively, risk becomes political. When operating rights depend on executive discretion, contracts stop being contracts. This is why even supportive executives refuse to commit real money. Not because they doubt the oil, but because they doubt the system around it. Analysts put it plainly. Major firms will not invest billions, much less tens of billions, without stability. At most, smaller players might risk tens of millions. Symbolic capital, not transformative capital. This is the invisible wall Trump's $100 BN promise runs into. A wall built not of ideology, but of experience. And once you see this mechanism clearly, the next escalation becomes inevitable. Because when capital hesitates, pressure doesn't disappear. It shifts, and that leads us directly to the second crisis. The second crisis is quieter but more dangerous. It unfolds in spreadsheets, timelines, and engineering reports. Not in headlines. Venezuela's oil industry is not a switch you flip. It is an aging machine that has been left idle for years. Pipelines corrode, wells collapse, skilled workers leave and do not return easily. Analysts estimate it would take $8 to $9 billion every year just to triple production by 2040. Not next year, not this decade. That reality collides brutally with political expectations. Promises of quick output gains, hints of lower energy prices, the idea that control alone can accelerate geology. Chevron, still present, moves carefully. Repsol sees potential, but only under the right conditions. Exxon sends a technical team, not a check. This is not hesitation. It is discipline, because oil investment is irreversible. Once capital enters the ground, it cannot be withdrawn. So companies wait, they study, they stall, and in that pause, a second crisis emerges, not of supply, but of time. Because while politics moves fast, energy systems move slowly. And it is ordinary people who feel that gap first. And this is where the story turns personal. Because while executives wait and governments posture, you live inside the consequences. You are told that oil wealth will bring stability, that production will rise, that prices will fall, but day after day, nothing changes. When investment stalls, jobs don't appear. When production crawls, public services don't recover. When revenues are frozen in distant accounts, daily life stays frozen too. For ordinary Venezuelans, oil is no longer a blessing beneath the ground. It is a promise always deferred. And even beyond Venezuela, this matters to you because energy markets shape inflation. They shape food prices. They shape political anger. The uncomfortable truth is this: there is no shortcut from force to prosperity. If you care about how power actually affects real lives, not slogans, not press conferences, then this is the moment to pay attention. Because what happens next will not stay contained. It never does. And that brings us to the global ripple effects already forming. What's unfolding in Venezuela does not stop at its borders. Energy is a global system. When one major reserve remains offline, pressure shifts elsewhere. With Venezuela contributing less than 1% of global supply, every delayed barrel tightens margins. Producers with stability gain leverage. Consumers absorb volatility. For the United States, the strategy is double-edged. Control offers short-term influence, but long-term credibility is harder to manufacture. Allies watch closely. So do competitors. If oil revenues are managed through political discretion, others ask a dangerous question. Could this happen to us? That uncertainty travels faster than any tanker. It shapes how governments hedge, how companies diversify, how capital reroutes. And this is why analysts warn Americans not to expect lower oil prices anytime soon. The system cannot absorb political shock and technical decay at the same time. Venezuela becomes a signal not of abundance, but of constraint. A reminder that energy security is not just about resources. It is about governance. And once that signal is sent, the future stops being singular. It fractures, which leaves us with three possible paths ahead. From here, the future splits into three paths. The first is the optimistic one. Political stability emerges. Rules harden into law. Revenue control becomes transparent. Real capital slowly returns. Not $100 billion at once, but steady, disciplined investment over decades. Production rises gradually. Trust rebuilds not because of promises, but because of consistency. The second path is muddled. Selective reforms, partial sanctions relief, limited investment from smaller players. Production inches upward, but never transforms. Venezuela remains rich in reserves, poor in outcomes, a country permanently almost open for business. The third path is darker. Control deepens without reform. Legal uncertainty persists. Capital stays away. Infrastructure decays further. Oil remains underground, valuable, inaccessible, irrelevant. None of these paths are chosen by speeches. They are chosen by institutions. This is the hardest lesson in global economics. Resources create opportunity. Systems decide outcomes. And once you understand that, the ending becomes unavoidable. So let's end where we began with that word. Uninvestable. Not because Venezuela lacks oil, not because the world lacks demand, but because trust, once broken, is slow to return. This story is not really about Donald Trump, or Exxon, or even Venezuela. It is about a rule that governs every economy on earth. Power can seize assets, it can seize leaders, it can seize revenues, but it cannot seize confidence. Markets do not reward control. They reward credibility. Until institutions matter more than individuals, until rules outlive politics, oil will stay underground and promises will stay rhetorical. If this analysis changed how you see energy, power, or global economics, share it. These are not abstract ideas. They shape prices, stability, and lives. And if you want to understand where the next fault line is forming, because it already is, stay with me. This conversation is far from over.